Hey, Boom, good morning. Good morning, everybody else. I've got a really good stream planned for today. Hoping you will enjoy. It's a little something different. A lot more in depth, a lot more detail. Shaky, good morning. We've got the FOMC announcements today at 2 p.m. Eastern Time. If you all can hear me, please chuck a 1 up there so I can do a little audio check. We're going to have no technical difficulties today. Good morning, good afternoon, good evening, ladies and gentlemen, wherever you are in the world. I got a little bit scared there. Thank you, Shaky, for clearing that up for me. I'll put my face closer to the mic, so hopefully it gets a little bit louder. Wherever you are in the world, I hope you all are doing well. Today is FOMC. I'm going to pull up my little thing here so that way you all know this is not financial advice. The information on this channel is provided for education, informational purposes only, without any express or implied warranty of any kind, including warranties of accuracy, completeness, or fitness for any particular purpose. Please feel free to read through this so that way you know I'm not a financial advisor. This is not financial advice, and it's only for educational purposes. Good stuff. All right, so FOMC this afternoon at 2 p.m. What does that mean for me? What does that mean for trading? Any other session of the day, Asia or London, is much higher probability. New York session tends to, I'm not saying there's never any good trades in the morning, but what I will tell you is that most days when FOMC is in the afternoon, the market will tend to consolidate and move in a certain way that is more trap-like or range-bound. Or even where there's commitment to a move, it'll force you to get in at certain areas of the chart and then reverse off of or soon after, kind of trapping you and not going as far as expected or as normal as the trade would, in a normal trading condition, that setup should have done this, but because today's FOMC, they're going to consolidate the market and then move it later this afternoon. So what I am going to do today is I'm going to analyze these 5 pairs as if I was trading today. But the most important thing is, or the thing that I'm going to focus on the most today, is going over templates. I want to show you all the different types of templates in a more note card style or a more note card fashion. And I'm actually going to do a full video on this coming soon where, I kind of break it down in more of a note card style. I think that's going to be a really great way for you all to receive the information. It's all the same stuff. I just keep repeating it in different ways and hoping that people kind of catch on to it. Maybe I say something a little bit different. So I'm not going to talk too long about this. Let's start with the NASDAQ. As always, going to be starting off with, if you're new here, if you're new to this style of trading, my analysis process stays the same every single day. It's going to be, you can zoom out and look at like weeks of breakouts. I do this to see, is the market really overextended, or are we coming off of a fresh or new trend? So like maybe let's say like this, the market had been going down and then this is the first week that we broke out. Like I need to know that information. So the fact that this has been breaking out now for 3 or 4 weeks, that is very important to me. You might be asking, well, why? 3 or 4 weeks of breakout. Let's say, for example, I've got 3 or 4 weeks of breakout and then, I don't know, tomorrow or Friday, I come to the screen and I've got 3 sessions outside of a previous day's high. Hey, I could say, hey, this could be a setup that I need to be looking at. So that's one of the things that I like to look for. Either a fresh new trend based off of weeks of breakouts or an overextended market looking at 3 or 4 weeks. But that's just a big, really big picture piece. The next thing I'm looking at, and the most important things, I'm starting to kind of narrow it in a bit, are going to be the different types of 3-day setups and 3-day templates. There's lots of different sources of information out there. Obviously, I learned this stuff from Stacey Burke, from Stacey Burke Trading, about the 3-day setups. That was my initial, place of learning. But as I continue on in my journey, finding things like Taylor, BTMM, all these different other aspects, or even older, going back to the 30s, 40s, and 50s, the market moves in threes, and there's lots of different variations of that out there. But narrowing things down to these different types of 3-day templates kind of puts it in a much more and simple way of analyzing. And because the 3-day setups are templates, you can pull out your note card and say, hey, that's the template, and then this is what I need to do based off of that. So I'm going to look for signal days: first red day, first green day, inside day, 3 days of breakout, and outside bars, outside day. Those are the signal days. Then I'm going to look for 3-day weekly templates: Monday, Tuesday, Wednesday. That's 3 days. Wednesday, Thursday, Friday. That's 3 days. Those 3 days is like a math equation. Monday plus Tuesday should equal something on Wednesday, and we'll take a look at that. And then also we have the 3-day cycle. The 3-day cycle being, it could start on any day of the week. So let's say, for example, I've got Monday, Tuesday, Wednesday. Monday plus Tuesday equals Wednesday. Now that is set to 3 days of the week, but those templates are the same as the 3-day cycle. Excuse me. If I was looking at Friday, Monday, Tuesday, I could still have the same exact template as that Monday, Tuesday, Wednesday. It's just occurring on different days, and that's something that I could look out for. However, this is good because I can just keep looking for those exact same templates over and over again. So instead of just zooming in and out on the NASDAQ and running my mouth, let's go forward and start looking. What I do every single time I do my analysis, whether I'm doing it with you all here or I'm doing it by myself in the evenings. I like to do it in the afternoons, the day before. So like 1800, 6 p.m. Eastern time. I'll come in and take a look. Market's closed. Everything's closed. I'm looking at the day, the previous few days in hindsight. The day is closed. The new day has not opened, and I can make determinations. Okay. So I'm going to list off all of the details. This is something that I really emphasize in the boot camp, and as well as, whenever I talk to you all here on YouTube. I am huge on attention to detail. Now, do all of those details necessarily mean something for that day? Probably not, or maybe not. But seeing those same details over and over again, it builds a story. It builds and leads you into, hey, this setup is actually forming and building, and this is how I should be looking for it. All right, so from left to right like a book, we're going to start over here. First thing I've noticed is the fact that the previous day's low has not been hit since over here on this Tuesday. We've got breakout day 1, breakout day 2, breakout day 3, 3 days of longs triggered into the market. And then this day, yesterday, was now an inside day. Uh-oh. This is a little too big for me. Let's get this down to, that's an appropriate size, I think. Go down here. All right, inside day. So we got 3 days of breakouts, and then yesterday was an inside day. Now, I know that I've kind of been running my mouth quite a bit. Could this be a first red day max? Sure. But in reality, keep in mind, weeks of breakouts, we're in breakout to the upside. Days of breakouts, we're breaking out to the upside as well. So obviously, an up-moving market, the market only does 3 things, just like that poll says up there in the little chat box. Right now, we have broken out of Friday's high and pulled back. And then on the day itself, we've dumped down in 3 legs. Leg 1, leg 2, and leg 3. And then broke out today to go back up. Does that mean I'm going to look for a long trade? No. I'll explain that here in a second. Let's go to here. All right, so this is my playbook, but I've drawn this out for you all. And this is what I'm going to make my video on here soon, and I'll go into each one of these more in detail. All right, so what this is a really crude variation or crude drawings of the different types of templates, and I'd like to walk through a few of them with you. Okay, so this is like a breakout pullback template. I've got the 1, 2, 3. Those are signaling days. So the box would be like day 1, the breakout would be like day 2, and then the trend continuation would be day 3. Day 1, day 2, maybe like a first red day, and then day 3, first red day, short opportunity. 3 days of breakouts. Day 1, day 2, day 3, lower low, lower high. On day 3, reversal trade. Day 1, day 2, breakout, pullback. Maybe you get an inside day on that day 2. So maybe day 1 was breakout and the pullback was day 2, the inside day. And then day 3 is the trend continuation. Day 1, day 2 is an inside day. And notice how I've drawn the stair step up to the high. On day 3, they trigger previous day's high in reverse back to the other side of the range. Inside day, 3 pushes to the high in reversal. Day 1, peak formation high. Day 2, peak formation low. Day 3, parabolic. Day 1, peak formation high, peak formation low. So maybe like an outside day. They hit both sides of a range all in one day. Day 2 maybe goes vertical, or maybe day 2 is inside of day 1, and then day 3 goes vertical. All right, so there's going to be variations of the theme. Don't take this completely literal. These 3 days of breakouts, on the 3rd day, maybe it goes vertical. Maybe on the 4th day it goes vertical down. Maybe it doesn't go vertical at all. But this is what we're looking for, what I'm looking for, these types of templates. Are you saying the box is day 1? Yes. The box would be like day 1. For all of these, I think except for this one. I drew this one as like consolidation, breakout day 1, breakout day 2, breakout day 3. This is the only one that I drew where the box wasn't day 1. This was supposed to indicate 3 days of breakouts. That's the best way I could think about doing it. All right. But these are the different templates. All right. From the tips and tricks slide that I've shown you. First red and first green day. This is a first red day, obviously, but you could flip this over, make it first green day. It's the exact same thing. All of these can be flipped over for short trade opportunities or long, depending on, we've got 3 days of breakouts up. If you got 3 days of breakouts down, now we would have a long trade. The tips and tricks slide that I keep showing in all my videos, these are those templates. The signal days, those are those templates. The 3-day cycle, these are those templates. Okay, so hopefully that clears up a little bit or gives a better explanation of, why we're looking for certain things. So this right here, we got 3 days of breakouts, and after 3 days of breakouts, I would be looking for a lower low back down. Now, this is still moving. Oh no, I've clicked out of it. Hold on. Right, this is still moving higher, making higher highs and higher lows. So what would I really want to see with this? They've triggered previous day's low today. All right, so maybe we're going to go back to the other side of the range. One thing that I would like to see is how do we respond once we get to right here? Okay, so if I was going to trade this today, I would want to see how does it respond and what time do they hit the previous day's high? And then most importantly with the 3 days of breakouts, I really like to see lower lows. So we have higher highs, they pulled back, and then now we're going back to retest the high. Within this current trend on the day itself, I would accept, for example, the fact that we're making higher highs and higher lows. This broke this high, which confirms this as a low. I would accept a solid close below here as a lower low, and then 3 pushes back up and a continuation to go back down. I would accept that. That would be a playbook opportunity or a template setup for me. If this continues to go higher, so let's say it pulls back and then we go higher and it triggers previous day's high and then breaks down, that would be a playbook setup. I would take that. I would be happy to take that. Let's say that I don't get a lower low. What if it just blows off? And then 9:30 opens up and my low is really far away and it breaks down and then it breaks down, I would probably still be willing to take that because the low is so far away. And I'm going to talk in this live stream about my different entry methods and my thought process behind those entry methods. But I'm going to finish off this analysis first. Okay, so let's go with the NASDAQ first. 3 days breakouts. Yesterday was an inside day. Like I said, I'm going to wait until we get up to this level, but we have this nice stair step back to the high. So I'd be happy to kind of sit and wait and see how this reacts up here. The only other thing is that I would say is the fact that we're in a breakout market. We broke out on Monday. We pulled back on Tuesday. So this could be possibly something like this, or even like this over here. Okay, still in a long market. What else do we have here? I think that's really it. Yep. Let's go to US 30. All right, this is another 3 days of breakouts, except this has been going down. This one's been breaking out to the downside. So yesterday, we closed in breakout. Hopefully some of you, the next thing I'm about to say is the next thing I always say. We closed in breakout on a Tuesday. So I always project this line across. Why? Again, the survey that we have in the little chat box. Good morning, Carlo. The market only does 3 things. Right now, we're broken out. Other time frame traders are driving this market. Stacey Burke talks about other, the big money, daily, weekly, 4 hour, 1 hour, all driving this. So the big players are involved. We might get some larger movements. The market only does 3 things. We're broken out. We closed in breakout. And then I come back to, hey, what type of template am I going to look for? What my big thing with this is Asia makes a lower low. London pulls back. New York is the trade. Except Asia has made a higher high, and we continue to break out back up towards the upside. So if I was going to take this as a short trade, I would need to see lower lows being put in place, and that has not happened yet. The only thing that has happened is the market continues to trail and pull higher and higher. We had this Asia and London consolidation, a breakout, and a parabolic channel now, which has been dragging short traders higher and higher and higher. They're not letting these shorts out of the market, and they just keep pulling up. So if I was going to trade this in conditions, if I was looking at this in the session, which it's now 8:17, maybe it's after 9:30, I would be willing to take this as a long trade as long as it continues to behave this way, because I would be taking this as peak formation, low of week. Asia makes a higher high. London pulls back, goes into a parabolic channel, and I would look to get in on the blow-off move towards the breakout level and ultimately towards previous day's high if I have enough space. Now, if I don't have enough space, I'm not going to take the trade. So, like right now, first target, not really that far away. So maybe I wouldn't be willing to take this because my risk to reward is not going to be that great. Okay. Now, that being said, we've got this, we're pulling shorts higher and higher. What if the market breaks down? What if this is a 3 push pattern to the high of the day and then it breaks down and starts letting the shorts out? Now I'm going to be more willing to possibly take the short in the direction of the already down moving market. It would have to be in very certain conditions at a certain time of day for me to be willing to do that, but that's just the other side of that opportunity. Okay. So 3 days of breakouts going down. I'd be looking for a higher high on the inside. We got the higher high and they're pulling higher. So that's the 3 days of breakouts. The part that I said about Asia makes a lower low, London pulls back, that would be a 3-day template, Monday, Tuesday, Wednesday. Not based off the signal day, but this signal day on Tuesday kind of conflicting a little bit depending on what this day has done. This day is going more in line with this. So I would have to stay with that. Okay, we can even pull this down. Looks like maybe we're breaking back up. We will see. This is looking pretty interesting, though. I almost would be willing and kind of can see where maybe today we break the high, and then maybe Thursday is like a pullback day for a dump and a pump on Thursday, or maybe even Friday. Maybe today lands as a first green day. I don't know. We'll see. But you can kind of start to see how this template could form in the next few days, especially if we break previous day's high. Okay, let's go to Joseph. I agree. Maybe you came in a little bit late, Joseph, but I was saying earlier, and probably some other people did as well. Today's FOMC. I do not trade FOMC days. So if you missed the beginning of the stream, definitely I would go back and watch that because I've gone over a lot of decent material. I want to talk to you all about my loss yesterday on the Russell. The Russell was first green day on Monday. Now, I actually posted this in Discord. This was the only one that I was really looking at. Let's get rid of those. So this has been going down. And I even posted this yesterday that this was week 1 breakouts down here. And then week 2 breakouts down here. So this is a down moving market, and I knew that. And we got a first green day over here on Monday. They triggered previous day's high. So maybe possibly going to look for a dump and a pump. And the way that I saw this was leg 1, leg 2, and then leg 3 down. So in my mind, this was peak formation made at the low of the day. I knew that there was not a higher high in place yet. So I was taking a counter trend trade, which tells me get in small. Get in small, and if it plays out, great, you can add into it. If it doesn't, you're going to get stopped out real fast, and you're going to know it. So this bar here formed at 9:30. This was an outside bar that closed in breakout to the upside. In hindsight now, I'm seeing, hey, look at this 3 push pattern, and then the engulfment down. But in real time, I saw this, hey, yesterday was first green day. I've got 3 legs down and a peak formation made at the low of the day. I'm not very good at trading V-bottom reversals, but I can at least get in on the first pullback before it goes vertical. All right, so I took the close of this bar, 9:30, 9:35 opens. I entered the trade, and it started to go, which kept me in the trade, honestly. It kept me in the trade because it was doing great. Everything looked really good. When this pen bar formed, I moved my stop up, and I got stopped out on the next bar. Is what it is. I think this was still, I'm not mad about this trade. I think I did everything well. I think I did everything correctly. If I would have gone in with too much size, that would have been incorrect because this was a counter trend trade, which is lower probability, and it doesn't mean to put more size on it. All right, it just means go in cautiously and see how things go. I think that moving my stop up when this pen formed was really intelligent. And then also, the next thing would be, hey, if this bar would have closed at or near its highs, so if this bar would have closed, let's say like this, on the next bar, I wouldn't have entered at the open of the bar. I would have put a buy stop 1 tick above the bar, but I would have used more size because that would have been a much stronger signal for me to enter on the next bar. This bar was a little bit weak looking, so I wasn't really feeling too great about it, but it was still in line with my trades, so I took it. All right. I wanted to show that all to you show that to you all because I think that learning from losers, mine and your own, is extremely important, and if I can show that to you, then great. Let's see here. All right. So big takeaways. It was a down moving market. This first green day was actually a trap, and there was no higher high on this day. So I was going counter trend, which makes it lower probability. And hopefully those of you, I'm seeing some of you say that you hit that trade as well. Looks like we were all thinking probably around the same thing. And hopefully you all had the same thought process when it came to sizing down a little bit for a lower probability opportunity that was still a decent opportunity. It just didn't work out, and that's fine. Get rid of the gap. Oh, are you about to teach me something? Oh, that's crazy. You know, TR, I learn something new every day. Sometimes you all teach me something. Sometimes I just find something on my own. Anyways, I appreciate that. Just learned it myself. Yeah. Cool. Yeah, I like this a lot more. This is good. Good stuff. All right, so 2 weeks of breakouts down, like I said. Week 1, week 2. So now we're into week 3. We're into week 3 breakouts down, and we've triggered previous week's low. So that's a detail. Monday, opening range first green day. Peak formation high, we triggered Friday's high. Tuesday, peak formation low, we broke out, opening range breakout to the downside. Asia should make a lower low, London should pull back, New York should go vertical to the downside. All right, so now we've got higher highs and higher lows being formed, so that goes completely against everything that I just said. All right, so if I were to draw like end of day consolidation, remember, don't get sweaty and start panicking about the end of day consolidation, right? It's really not that serious. It's not that complicated. Just there's a peak there. There's a peak there. Just chuck your little box up there and see how it looks. All right. So we're breaking out now to the upside, and that's really all I know. I think that maybe it's possible that this first green. Okay, let's do this. Where did it go? Here you go, right here. Okay. Not necessarily a breakout day, but a higher high. So this triggered previous day's high. Imagine the market was going down like this. And then this was the higher high day. This was the higher high day. This is the pullback day. And then maybe now today was the trade coming in London, at the end of London. Now, I don't know. But coming into New York, what would I be looking for? What would I be doing? There's really nothing that I would be looking for at this point, not on this pair. Peak formation high, peak formation low. Is that breakout going to succeed or is it going to fail? Project that level across. Okay, we're breaking out to the upside. We get a little continuation, a little ramp. We're ramping volume back up towards the high. And we got this really big 1, 2, 3. How does that look down over here? Continuing to make higher highs and higher lows. Down moving market. It's got potential. I just don't know if I would be comfortable saying something on YouTube as of right now. A little bit early. If I was going to look at this trade, I would basically want to see them make a higher high and then break down and make that lower low, making this a good solid peak formation high at the high of the day and an overall down moving market. That would make the most sense. But I don't really think that this is a pair for me to watch today. I'm going to move on. Let's go to oil. Okay, so Friday. Actually, let's zoom out a little bit. How many weeks do we got? I think none. One. We got 1 week up. Last week was a breakout week to the upside. Then we get an inside day on Monday. And then Tuesday, yesterday, was an opening range breakout to the downside. And again, Asia should be making lower lows and lower highs, or London, or the gap time coming into New York. New York should be pulling back for the trade. Is the breakout going to succeed, or is it going to fail? We've broken out. We closed in breakout. London started making higher highs on the day, and we're going to continue to make higher highs until we don't. So what I would do now is I would go and look and see, okay, well, we're making higher highs and higher lows. This is my low down here. Caslo, good morning to you. Okay, I don't really have a signal day here. Pretty much for all of these, I was kind of quiet on this, but I didn't really say, like, hey, was there a signal day or not? There hasn't been any signal days. Okay, so this was the first green day. The first green day trade didn't play out. It may have played out today. NASDAQ, I talked about the signals. US 30, I did talk about the signals, so maybe I have talked about them. Opening range breakout, should be making lower lows and lower highs. If I was going to look for the continuation, that didn't happen. We're breaking out to the upside. All right. Now we're at the high of the day. Do I go against that just because it's going up? No. Maybe I just probably do nothing. Hey, good morning, everybody. Morning. If you're just coming in. I think this is another one that I would wait for the template just to continue to form. Yesterday was not first red day on oil. If anything, Monday was. Big pumping day. Monday. Yesterday was just a breakout day, Carla. All right, let's go to gold. That's my opinion, of course. If that's something that you in your category that's how you've decided to categorize first red day, then that's fine. Okay, wow, gold is flat. Let's see. Coming off of last week, we had Friday breakout day 1. Monday was a peak formation low. Tuesday went lower. Pulled back up on the inside, and then that leaves us into today. This is absolutely not what I really want to see. Okay, coiled, consolidated. No signal day yesterday. Weekly template, failed breakout, but we haven't triggered previous day's high yet. So it's kind of up in the air direction-wise. Out of everything, I think gold is probably my least favorite. I'll go back real quick. So NASDAQ, we made higher highs. We just made a lower low, so maybe we're breaking down. I don't know. Again, for those of you joining late, FOMC today. I know I saw some of you say that you don't mind FOMC. You'll still trade the morning. That's great. I don't. I won't even pull up my chart. A lot of times the market will tend to consolidate, so I won't even look at it. But if I was going to trade this, I would say, hey, that's a 3 peaks pattern. That's a lower low. Maybe I can trade the continuation on a lower high. US 30. It's been going up. All right, the market only does 3 things. Breakout trend, reverse, stay in a trading range. Well, I just gave it away for that. Yep, TR. Exactly. For that poll that's up there, I just gave it away. Giving away answers. All right, so the market is broken out. We're back up to that level. Maybe we're going to stop out the breakout traders from yesterday. Maybe we're going back to previous day's high. I don't know. But exactly what I just said, I don't know. I don't really have a trade that I would be willing to look for on this. Same with Russell. Oil, we're at the high of the day. And for all of these, by the way, I could still find scalps and things like that just based off of the fact that we're at the high of the day. If it starts to break down, I'd be happy to take that scalp. Am I going to go long from the high of the day? Likely not. All right. Even if it's an inside day? Oh, absolutely. Absolutely. You can have first red day inside. You'd have first green inside. That sets things up for a possible range expansion. That inside is the coil ready for explosion. All right. Now, what I want to do is I've gone over the pairs. I'm about 30 minutes in, so I'm on time. Time management is going well. Hopefully I'm not going too fast. Hopefully I'm not going too slow to the point of y'all are falling asleep. I'll grab a little sip here. I'm going to do something a little different. Normally these streams are only meant for analysis. I've already talked about templates. Hopefully this was useful. Please let me know if it is. Do you all like the idea of me doing a video more in depth based off of a note card style like this? Do you like this note card style idea? Put a 1 for yes, 2 for no. 1 for yes, 2 for no. I'm going to see here. I thought it was a good idea, but, I'm a little biased. I have ideas all the time, and I'm like, man, that's great. And then I do them, and I get all this hate in the comments. I'm like, holy cow, maybe I should have just not done this. It is what it is, though. It's all a learning experience. Send it. I like it. Good stuff. Okay, so I'll do a video. 1 and 2. All right, that's confusing. I'll do a whole video on this note card style. What I want to do now in this stream is I'm going to talk to you all about my entry, because I have used, since the beginning of me doing YouTube, I have done the same entry criteria over and over and over and over and over and over again. And then I do have variations on the theme or of the theme. My thought process probably changes a little bit in certain scenarios. So I'm going to show you all not only what my entry criteria is, even though I've shown it a bajillion times, and I know a lot of you are not new here. But I think it's going to help, hopefully, any of you that maybe are new, and also those have been around for a while, just to, get the idea kind of a little bit deeper ingrained. So, number one, I need a signal. All right, all those setups that we're talking about, this playbook that I'm typing on top of, I need a signal. Weekly template. Big picture. I'm gonna put big picture, all right? And that could be on the 15-minute. You could look at the 1 hour. It really doesn't matter what time frame you look at, because I'm not looking at the candles. I'm looking at the levels and where things opened and closed, how many days of breakouts, and all those different things that we've gone over, all right? The time frame that you look at this stuff on really doesn't matter. It's just, I use the 1 hour sometimes to keep the amount of candles on the screen lower, 15-minute to keep the amount of candles. I could do it on a 5 if I wanted to, but it doesn't really matter. All right, number two, on the day, okay? What kind of on the day am I looking for? Structure, right? You could put little subcategories. Structure, I want to see the structure of the market being good. If I'm looking to go long, I want to see a higher high be put in place. If I want to go short, I want to see a lower low. Okay, so after I get a structure break from my 3 pushes classes and all the things that I've talked about with 3 pushes, 3 pushes is not a strategy. It's just a way of me gauging a pullback, a way of me gauging how they're coming out of consolidation and where that pullback could end. And that's specifically what I'm talking about right here. So if I have, let's say the market's making higher highs and higher lows, and then I get a lower low, I'm going to look and see what kind of 3 push pattern am I about to receive over here to gauge where the lower high is going to be put in place. So that way I can look for my entry over here. Okay, so 3 pushes. Now, after I get 3 pushes, I'm going to look for a peak formation. What is a peak formation? Well, a peak formation could be a double top, triple top. It could be a head and shoulders. I'm not typing all this. Head and shoulders, inverse head and shoulders, all right? It could be a ascending triangle. It could be a descending triangle. It really depends on what sort of pattern forms over here. This could turn into a double top that looks kind of like a descending triangle. It could turn into just a double top. It could turn into a head and shoulders. It could be a micro head and shoulders. You get a bar up, then you get a bar down. Then you get a bar that goes higher and goes right back down. Then you get another bar that goes back up, and then a big bar that goes down, and it turns into a micro head and shoulders over here. I'm going to take that, especially if it's in line with my entry criteria and the time of the day. Okay, so on the engulfment of that peak formation, I don't know, and again, 3 pushes is very subjective. I don't know where the 3rd push is going to land until I get my peak formation high. So really, 3 and 4 go together because I don't know where the 3rd push ends until I get my engulfment. All right, so then I get my engulfment, and then I'm going to take my entry. All right, and then I'm going to put my stop above push 2. Everything that you all have seen in the playbook, again, and in the boot camp and stuff, the huge study binder with all of those examples, and I put the stop above P2 every single time. Once you get your engulfment and you look at the pattern, you get the engulfment, you take your entry, that's when I go back and I can look and say, hey, there's push 1, push 2, and push 3. I'm going to put my stop here above push 2. Less caffeine. Oh, what are we talking about over here? Holy cow. Anyways, so we're going to go back to this. Stops go above push 2. And then as far as targets go, I've got a couple different ways of targeting. And I don't do it the same way every time. this is really going to be situation dependent. I look at the chart and I say, I think that based off what the chart looks like, this target is most likely. That could be levels. So it could be previous day's high. It could be previous day's low. It could be closing price. Then you could have range expansions. But there's different types of range expansions, right? This is where things start to... It's like, man, this guy is just going on about all these different things. How does he choose which one? That's where the simplicity comes in. I don't turn it into rocket science. I just look at it and go, man, this looks like it could go here because it just seems the most probable that this is the level I'm going to get to. I try not to go too big, too greedy, and then I try not to make the risk to reward so small that it's not even worth taking. All right. So range expansion, what kind of range expansion? It could be current consolidation. Current consolidation. So if I were to measure, so like this consolidation here, I could take the high and the low of this consolidation, and then I can measure that and say, hey, this is where I'm going to target. It could be a range expansion of the entire day. So I could take the high of the day here and the low of the day here and measure that and range expansions. It could be high and the low. Let's say that yesterday was an inside day and we're in a strong breakout. It could be the high and the low of the previous day, and that could be my range expansion target, and that's the one that I use. It really depends. And I'm not going to sit here and tell you that I do it the exact same way every single time and it's set in stone. That part, to me, is a little bit more subjective, and I just do the best that I can to find targets. Okay? So, entry criteria, big picture first. Don't go crazy. I don't go monthly, weekly, all these different time frames trying to figure out my support and resistance and all that other garbage. I don't need all that. Okay? Big picture templates. Then on the day, I want to see a certain type of day based off of what signal I received yesterday in order for my playbook setup to actually play out. And I want to be at the levels that I need to be at. Once things start to play out structurally, I make that higher high, I get a 3-push pullback, I'm getting in. Now I get a peak formation, I enter, my stop goes above or below P2, depending on if I'm long or short, and then I pick a target. Now, this is where things become a little bit different in the sense that sometimes I don't get this one. Sometimes I go against the trend on purpose because the time of the day and the way that the market currently looks and the setup that I'm looking for, I'm taking a session scalp, I'm in with smaller size, and I expect it to not go that far, but it should go very far. It should go quickly, if that makes sense. Basically, I'm trading the stop hunt, and usually stop hunts are very fast, they're very aggressive, they're very convincing. So let's say that we're in an uptrend, and the market blows off in a direction. Now, this blow off didn't just happen at any random time. This happened in the gap time, or maybe in the first hour. Probably in the gap time, right? And then it blows off, and then we get up here, and they're just working the high of the day. And then it starts to break down. And what happens and why I take these is because the high of the day and the most recent swing low is so far away, and even the breakout level, right? That is so far away that if I take this trade, I still have 30, 40, 50 pips or ticks or points or whatever to get down to that level. So my risk to reward can still be good, and they should go there very quickly. I just close the entire trade once we get there, and everything is great. All right, so this is kind of one of those instances where I'd be willing to take the trade even though, I don't have a structural break. I'm just taking it based off of, hey, this is a stop hunt. They're going back into the trend against these people to make them think it's going to go short, or to stop out people that are long so they don't get their profits or whatever. And you can just go look at your chart and see anywhere in the chart where there's a trend, right? And they're up here and they start to break down and it pulls back. It goes from up high to down low very quickly, back to the breakout level to get those people. Okay, and then it pops back up. Again, very fast to get back down. Anyways. Is that in line with the big picture? John, what I'm talking about here is usually just going to be based off the day. All right. A lot of times, like you could be in an uptrend and I still take a short trade because the day is set up for that. But I'm just going to take it as a counter trend, stop hunt, scalp opportunity compared to, hey, it's a 3-day setup and this is supposed to go 200 points or 200 pips or whatever. Yeah, like a 3-session trade. Exactly, TR. Exactly. Dang, I think this has been a pretty good stream. Hopefully you all have been enjoying this. If you have, we have almost 100 in here. If you hit that like button, it really does help the stream. And then after this, if you all like close out of here, I end the stream, just go down to the comments and say, thumbs up or something like that. It really does help more than you all realize the stream to do better. Or else these things are just going to keep getting like 500 views and stopping, which, it is what it is. But where do you get the playbook? Currently, it's a part of the boot camp. But if you just want this playbook piece, then just message me on Discord, and I'll probably just send it to you. All right. Any questions, comments, concerns? I always like to stop at the end of these streams and ask if you all, have any questions. I feel like I've gone through a lot of stuff today. All done in 45 minutes, too. Not bad. And we didn't have any technical difficulties today. The boot camp it's all the time. It's down in the description. You can go down there and grab it if you want. Well, today, okay, so for everyone who's still in here, I don't trade FOMC days. That's why I tried to do more like this, because I want you all to walk away from sitting here with me for 45 minutes with some value. I don't want you to just walk away and, well, he's not trading today, so he's just kind of going through this analysis and then whatever. I went through the analysis as if I was actually trading today, but I really wanted to focus more on this stuff, okay? Hey, Cam, what broker do you use? Trade-O-Vate, and also I have Top Step as well. Appreciate it. All right, ladies and gentlemen, it's been a great stream. I really enjoyed doing this one. I'm going to make that video on these note cards. I think that'll be greatly beneficial to everybody. And then also this week, I am doing another video. This will probably be the week after this one. You'll have a great rest of your day. And I will see you in the next one. I've been doing these streams every Wednesday and Friday at 8 a.m. Eastern Time. I will see you in the next one. Bye-bye.